Warriors. I'm Dale Pinkert, the host of FACE. How's everyone doing today? I want to welcome our viewers at investing.com to our webinar today. We have a great guest, Lydia Finkley, all things cable. She'll be covering pound dollar and all the crosses. Always clarifying to listen to Lydia. So looking forward to that. I just wanted to show this. This is not a commentary on whether or not you should buy or sell crypto, but just take a look at that chart. Just based upon appreciation, Bitcoin is the biggest bubble in history, exceeding the tulip mania, which is legendary, and the Mississippi and South Sea bubble and the tech bubble here in the US. So just keep that in mind. There is something called gravity. I believe in the blockchain technology. It's here to stay. But if this turns out to be anything like the tech bubble, there should be a bear market in prices. And that's going to be the time. Consider this 1999 in crypto. And then you had your shakeout for a couple years into 2002. And so if you missed the mania with anything that had .com at the end of its name, you know, you were there to pick up the survivors that went on to be flagships. Okay, so I'm thinking the same thing here, although just like in equities, money can rotate. It can rotate from sector to sector. And there's a lot of talk on the street as the bubble pops in Bitcoin that rather than going to cash, that people are going to look for alternatives. It's already showing up in Litecoin. It's up, you know, 1,000%, 1,500% from, you know, 6 months ago. So just, you know, tread lightly out there. I missed it. I miss trades all the time. Of course, this was a huge one to miss, but you know, when I think about it, say I had bought 10K worth of Bitcoin at 500 apiece, okay? You think that I would have ridden it all the way up to 18,000? How many in here thinks that they would have ridden it all the way up to 18,000? Okay, so very hard to do. In fact, usually the only two sets of people, Amanda didn't, okay. I mean, you buy it at 500 and it goes to 5,000, you go, wow, super grand slam home run, right? Okay, so really two classes of investors are able to ride moves like this. The naive, okay, that never have sat through market corrections or seen a bear market in their career, or someone who's just, you know, so greedy and has all these unrealistic expectations that became realistic. So very difficult for a trader to ride parabolic moves, especially exponential ones like we're having here in the crypto world. Everyone with me? So, you know, don't feel bad that you missed it. I've seen a lot of different market phenomena in my career. Hate to admit it, I've been doing it since 1977. So what are we talking about, guys, here? About 40 years, almost 40 years. So I've seen some fads. I've seen things come and go. There'll be another opportunity for crypto. I really believe that. So maybe use the time now to educate yourself about it and learn about the advantages of each issuance, you know, each different type of coin, and be prepared when there is a washout, which will happen someday, I think, sooner rather than later. You know which ones you want to begin to accumulate. Everyone with me? Litecoin, yes, yeah. Except my stepson just bought some 2 days ago. I did look at Litecoin. To me, it looks like it could pull back to 240. So we're going to see what the effect is when one pops, or, you know, it could be something like a fraud. These are not regulated exchanges. Who knows if they even really do the trade? You know, in the old days, there were things called bucket shops, and you would think you were doing the trade, and the trade was never put on. So, you know, just something to keep in mind. They're the only regulated vehicles. I believe there's an ETF or two, and now the new futures contract, which is still very thinly traded because they don't have guys on the floor anymore. So anyway, that's my crypto talk for today. Everyone with me? See this? Biggest bubble in history. So at least we've had the pleasure of witnessing the biggest of a mania here. So I want to get to the markets because I want to tip my hat to Blake on the Aussie from this week, buying it against a major trend line down here. Great week. So ForexAnalytix finishing the year, starting to finish the year strong. I was pounding the table on the pounding the pound table around this 33.10 level. It's starting to shape up, starting to look like a bull flag. I think that what happened here the last couple of days in the dollar, in my view, is pretty negative. I look at this as almost being like a bear flag. And when I take a look at it, I think there's a lot of potential for a washout into maybe the end of the year, early next year, down under that 91 low. You could get a better view of it on the weekly. So we have this hit. Here's your weekly Dixie chart. We have this hit. And if we get something like this, we could take it down to the 90 level and maybe even have a throw over here. So I remain pretty negative the dollar. And, you know, I don't think anyone here in face got caught short euro or pound or Aussie. All of us were dollar bears going into the Fed yesterday. So we've had the ECB decision, you know, no major effect on the market. There was even a nice call by Blake in the gold, looking for a gold pop a day before it happened. So Blake's been in the zone. And for people that don't know us at ForexAnalytix and aren't familiar with all the accumulation of a lot of work, but not just quantity, quality work, here's a look at our traffic light page. Also, you know, a lot of people don't realize that see this for the first time. We have phone apps for all of this. And so you could go about your life. You know, I know everyone's busy. They have Christmas shopping to do. Go shopping, you know, and use the phone app. I guarantee you that if there's anything significant happening, like different support or resistance areas being taken out, you're going to get a push alert. You're going to know about it. And you don't just have one person working for you. You have some of the best eyes in the industry keeping an eye out on the markets, which keep an eye out on the markets for you. So you're really not a prisoner to your workstation, to your laptop, to your desktop because of these guys. Okay? So those are some of my thoughts coming into today. I think the dollar's in trouble. So I would look at any dollar strength as being a selling opportunity. Okay, Lee, well, I would say be patient with yourself. Everything takes time. You can't learn experience. It only comes with the passing of time. And in our industry, that's screen time. Find a good community and surround yourself with traders better than you, and don't go live with more than a micro account for at least 6 months. So you've just been mentored. Okay, Lee, and welcome to our community. Also, you can learn a lot in our other chat room where there are traders that's how they feed their families, keep a roof over their head, put their kids through college. They do it through trading. So great atmosphere for you to consider to be in, even if you're just an observer. Hello, Kareem. Their total. Am I correct on that, Steve? The stats, the hit rate, everything. Total from day one.
Yes, indeed. You know, we try to be 100% transparent, and I think we've at least managed that. Good morning, by the way, Dale. How was your night?
Good morning to you, Steve. And you're so transparent, I could see through anything you say. I'm good, buddy. So
obviously, you know, we've been going through 24 hours of a lot of events, a lot of event risk. We had the Fed, we had the S&P, we had the BOE. We already had the interest rate decision from the ECB, which, you know, is steady as it goes. But, you know, for me, in the vast majority of the cases, especially with, as long as Draghi has been the head of the ECB, you know, the vast majority of the interest rate decisions are all about the press conference. And, you know, the statement that Draghi is going to deliver, okay, we already know, but how he's going to lead, how he's going to answer the questions, how he's going to, in essence, lead for, you know, what's coming ahead in 2018, since this is anyhow the last press conference and the last interest rate decision of the year for all central banks. So that should create or dismiss any expectations the market has. So for me, the ECB event risk is not over yet. It's going to be at least like 15 to 20 minutes after it starts. So after we get the statement and Draghi answers the first few questions, I think that's when we will be able to say that we, you know, we put it in the past. Now, having to do with what's coming ahead, first of all, I can start by comment.
Go ahead.
Okay, let me take the screen. Okay, first of all, let me start by I think you sound far away now, Dale. I don't know what.
I sound
Dale?
far away?
Yeah.
Huh. I keep getting this message that they're detecting new hardware.
Okay,
and,
now we can hear you.
it.
Now we can hear you again just fine. Okay.
Okay.
Okay, perfect. So yeah, so first of all, let's begin by discussing what happened yesterday after the Fed. I mean, you know, I can't say that I'm really surprised, because if you remember, one of the comments I made yesterday is that very often, even if you get in advance the commentary, you won't be able, especially with stocks, you won't be able to assess with certainty what's going to follow. So, for example, the vast majority of what we got yesterday from the Fed cannot be actually read as like dovish comments. I would say that the vast majority of the comments were like neutral, and we even had some you know, little gems right and left that, you know, point to a more hawkish stance. But regardless, probably just based on the fact that we had two dissents having to do with the interest rate decision, so Kaskari and one more like voted against raising interest rates, we got the dollar to sell off. So that's why we see this big candle that we got in the USD yen. If you remember, we said that the first two instruments that we should be paying attention to is the USD yen, and most importantly, and first of all, is the treasuries, right? So this is the 10-year treasury, not the yield, the treasury itself. So we got a rebound. We said yesterday that the treasuries were sitting just right at support, and they were threatening a break lower. But, you know, we made very clear that we first need to see that area break after whatever the Fed says or does for us to be convinced, you know, that you know, the move lower is resuming. We got the exact opposite. We were sitting just on support, and, you know, we got strength following, and that's why we also saw US dollar weakness. And sorry, I was reading something Greg wrote. I thought he might attend. Given that, we got some very interesting rebounds. First of all, if you remember, we had said that two of the pairs that were best positioned in case we got dollar weakness were the Euro USD, and that's the reason we had a descending wedge here. And in general, we remained constructive despite seeing like a couple of weeks of weakness, and we did get, you know, a strong pop above it. And the other one was cable, since it was sitting right on the on a bull flag support. Yeah. So we got a pop there as well. That was also, you know, a good, that also gave a good incentive for the Aussie to actually finally break above, you know, a key level we were monitoring. Same thing with the Kiwi.
I'd say Aussie Kiwi, they were the stars this week.
Yes, yes, they were leading. They were leading in this case. Yes, yes, that's absolutely correct. So more or less, both of them have now confirmed that a stronger rebound is in the cards. Obviously, we might see some shorter term pullbacks. 69.70 should be support for the Kiwi from this point on. Having to do with the Aussie, 76.40 is the level to watch. 76.30, 76.40, that little area there. So obviously, for somebody to be buying dips on Aussie and Kiwi from this point on for at least like a stronger rebound, because let me be clear, I haven't turned bullish these two pairs, but that does not mean that a correction will or cannot extend higher than what we've seen so far, right? So I think that any pullback should be a good opportunity for people looking to trade these corrective rebounds to buy and look for at least one more leg higher. I think that the next area of resistance for the Aussie is the 77.50 area, and the equivalent area for the Kiwi is the 70.80 to 71 area. We have there the 38.2. We also have the 200 DMA. So I think that, you know, any decent pullbacks will give opportunities, you know, to look for at least these targets, if not higher. For example, Kiwi can also extend to the 71.70 area, the 50% fib, or even a little bit higher. Having said that, as you know, I'm not involved with them, and I explained very clearly, since I had a good month, I'm looking to start taking risk off the table, because from experience, we know that roughly by the end of next week, liquidity is going to completely thin out. And we've seen many occasions that when liquidity thins out, we see stupid moves in the market. And very often, I remember like, what was it, three years ago, that the euro hit 140 between Christmas and New Year's, which was clearly, you know, a driven move to wipe out several shorts, you know, before the market then rolled over and started moving lower from that point on. So, meaning that by the end of last week, I would ideally want to not be holding any more positions. Had a good year, had a good month. What I'm involved with at the moment, besides obviously still holding my gold short, which is in the money, and I have no reason to cut it loose yet. And if I do so, I'm going to do it at my second entry and book profits on the first one, and just take the second entry at 12.65, you know, just at cost. Is the USD NOK. The USD NOK played out very nicely. It has actually already broken below the ascending wedge. Earlier in the day, it tested the confluence of the 200 DMA and the ascending channel. So that's going to be like 100% confirmation that it's moving lower. I'm already short this, and I'm probably going to be adding on a daily close below there, looking for it to move at least once again towards the 810 area. And the USD SEK, if somebody checks it, because I know that we have some friends asking about it, is also in an equivalent situation. It's actually testing trend line support. So I'm guessing that these two should break to the downside at the same time, more or less, if they end up doing this move. So, you know, they both present probably good opportunities as long as we get like the final confirmation. I had already jumped the gun with USD NOK because I had plenty of reasons to want to be short. I mean, technical confluences, and also my macro thesis is that the NOK should really strengthen, especially in against the USD. So I'm already involved with that. Now the only other position I'm keeping for now is the DAX, which is also it's actually testing once again, channel support, and I'd really want to see it extend for one more move lower. I'm looking towards the 12,500 area. I think that's going to be a good area, and if we actually get that, I'm going to book that as well, and call it a trade. So these are the things I'm currently involved with, and I'm going to be happy to check out before we get the ECB pressure. Blake is going to be with us, and I'm going to be monitoring what Draghi says so I can interrupt if we get something interesting. But until then,
gold, yesterday's precious metal action change your view? I know you just had partials on them.
First of all, listen, you remember very well that I had taken full profits on my silver.
Right.
I did that almost at the lows. So, I'm fine with that. That was booked, and it's the end of this deal. Now, having to do with gold, was the pop nice? Yeah, it was. I mean, and it came from confluence of supports.
Right.
Do I have confirmation that that's it, we're turning higher? Absolutely not. Because we haven't even broken above the 1260 area. So for me, I have no reason to treat that like anything more than a rebound from something that was short-term oversold. So I'm holding my positions. I have an entry at 1289, so this is not at risk. I have a second entry at 1265. I currently have stop for both of them at 1265. Depends on what happens. I might even change that, put it a little bit higher. I'm not going to risk losing all my profits here as well. For sure, that's the only sure thing. But why not? I mean, I wouldn't exclude like a resumption lower rather soon. So no, I'm not taking. I'm not even booking profits yet on gold. I'm going to be more patient.
Do you want to address Martin's question, Steve?
Sure. Sorry, I haven't checked it. Let me have a look at it. Let me open the question box. Hi, Steve. I mentioned this sometime before, but do you post your trade ideas and pattern play on ForexAnalytix? I can't see them posted, say gold or USD NOK trade. There was not an alert. Listen, Martin, most of the patterns in play in basic technical analysis, Blake handles them. My personal style of scaling in and scaling out of the markets, I make me feel less comfortable because I usually scale in multiple, the patterns in play are educational. I mean, the vast majority of the patterns in play we put up, we do trade as traders. So that's something important for people to know. It's, we just don't put that in theory, although sometimes we might put something that we like, but we don't want to trade because, for example, Blake explained yesterday why he had a pattern play long in gold, but he didn't take it because he had already a lot of risk on his books being short USD. Equivalently, since I like to scale in and scale out, and we don't have that ability because it's like one entry, one exit. Many times, no, I don't put patterns in play. But don't forget that we also have the chat room, and I always live or within a few minutes announce what I'm doing. So many of the trades we take, we do not put as patterns in play, but subscribers that have access to the chat room, all of subscribers have access to the chat room nowadays. Those that haven't completed 6 months with us or don't have a semi-annual or annual plan can only read it, but they still have access to the chat room. So everything is posted on the chat room live or almost live. So for example, whenever we take a position, we write there what we did, what we're doing, or and in the vast majority of the cases, we even write in advance what we're planning to do. Okay.
So maybe there's a little middle of the road that, some of your stuff, you could maybe be a little bit more active in a lot of your stuff becoming pattern in plays. The ones that you have high conviction on, and but I know I can understand it's hard to tell people how to scale and how much leverage to use when they're doing it. It complicates the whole issue. But your calls have been really, you've been in the zone. So
yeah, and as you know, I mean, people that have been with us 8 months, you know, I'll always try to announce in advance what the plan is. And you know, it even happens even more in the chat room. I mean, every day I go in the chat room, I say hello, I give an update about my positions. Then whenever I decide to change or trim something, I'm always writing like, okay, I'm now going to book that, or I'm now entering that position, or I just entered that position like 5 minutes ago, or you know, whatever else. So we're always prompt, all of us. It's not only me, in the chat room, letting people know what we're doing exactly. You know what I mean? Because there, you have the ability to also explain the logic behind something, and also give people the ability to ask questions about, okay, why are you doing that? Why are you taking half a position in? Or why did you book half of it, or whatever? Because that makes it a lot more interactive, and this way you can also explain the logic behind it a lot better for people to understand what you're doing and how you're doing it. And then they can take a decision if they like it for themselves, because don't forget that, you know, we're not a service that we trade for you. I mean, ideally, what we want to do is give you a community to trade with and teach you basic principles of how to do that, and give you the ability to see how people that have been doing that for a long time are doing it, and they're doing it in a successful way.
You to make your own decisions.
Yes, so perhaps then you can become even better on making your own decisions, or at least following some of their decisions, but knowing exactly why you're doing it, right? I mean, we don't want people to be copying what we're doing, although I understand that if they want to do so, they can just enter the chat room and try to copy whatever Blake, Grega, I, Stelios, etc. are doing. But, you know, the concept for us is not to give you a fish to eat, is to teach you how to fish. You know what I mean?
Yeah. So, okay. All right. So that's the explanation.
Okay, so let's have a look at we have a lot of questions here. Your introduction about cryptocurrencies. I know. Are they such a total sins? Yes, Kerem. What you find, all of our patterns in play are posted there, like 60, 70 pages of patterns in play posted there. You will find all of them since the day we opened the doors of ForexAnalytix, so you can find all of them and all the statistics about them. Since ForexAnalytix went live, I don't remember the exact date. It was around the 20th of July 2016, so like roughly 1.5 years ago.
Hi, Penny. You could be an observer in the chat room. It's not a chart room, it's a chat room. Steve, you want to show Penny the chat room?
Absolutely.
And you can be an observer. You can be an observer if you just subscribe for 1 month. If you want to be a participant, it's once you have a total of 6 months as a subscriber, or subscribe for 6 months right away. So you can see right now we have 92 speakers in there. I'm not sure, what part of the globe are you in, Penny? Because the room is open 24 hours.
Yes, it is. And since we actually even have people from Asia, Australia, etc., obviously during late night time, you know, there are a lot less people.
People are there for Asia. How about Europe?
Yes. Oh yeah, absolutely.
And Penny wants to know. Penny wants to know how much. So I mean, there are different levels. She's in Spain. Different levels of subscriptions. But what would you say, Steve? The average subscriptions, what, about 80
so,
a month?
Average, it depends on if you also take it on a monthly plan or a semi-annual, because, you know, semi-annual has an implied discount and annual has a bigger discount. But the average plan is at 72. You can start from anything from $54 on the monthly plan, which goes lower, as I said, if you buy a semi-annual or an annual. So it starts anywhere from $54 and goes up to $89 if you are on a month-to-month basis for the tier 3 package. But even the simple package gives you access to chat room. So, you know, anything from $54. Actually, I can show you very fast.
And Amit, the name of our website is www.ForexAnalytix.com. Analytics spelled, and it's right there. You could just hit the link. There's a link for our website.
There you go.
Right?
This is our pricing list, as you see. So so it starts. I mean, if you buy, for example, an annual tier 1, it only ends up being $41 per month. So that's the cheapest you can get access with, and it goes all the way to tier 3. The differences are the tabs that you get access to. So the basic one gives you access to macro, candlestick, basic technical. Then you can choose in tier 2 if you want to add to that harmonics or Elliott waves, and tier 3 includes everything. I'm not going to say that because it's the most expensive, but the concept of the service becomes even better if you go with tier 3, because the whole inception is getting multiple confirmations or confluences about, for example, when all types of analysis, or 4 out of 5 types of analysis, agree on something. As you understand, statistically speaking, the chances of that happening are very high, very increased. Okay, and you know, so the
answer to Mark is yes, and yes, and yes. Blake and Steve and Stelios, very big on the fundamentals. We do hold positions into important events, although taught them, you know, good money management. And also, yes, we're big believers, and I'm a big believer in reacting to the reaction of red events.
Okay, so let's go back to the markets and okay, see whatever our friends want to know about. And Blake should be with us any minute now, so I can also pay attention to what Draghi says and see if we get any gems from there.
What do you suggest new people should subscribe to for a plan, Steve? Say you never traded FX before, but you want to learn.
Martin, I don't think you understand. Sorry, I just read more messages from Martin. Martin, you have access to the chat room since day 1, mate. So you already have access. You should already have access to the chat room, even if you are on a trial. You don't have to wait 6 months. You have to wait 6 months just to type in the chat room. We're doing that so we don't, you know, there are a lot of people that might want to, you know, be disruptive. And if you gave them the ability just from the trial to do that, you know, you would potentially create a problem. But you can access the chat room already, even if you are on a trial. If you don't know how to do that, you should have received an email. Please make sure that you contact support through the intercom. If you go to our website, on the bottom right, there's an intercom button, and you know they're going to help you out in how to do that immediately. Okay. Yes, we do money. I think Dale already answered that. We answered that as well.
Well, new people, the question about what plan, say, for example, Steve, you were just starting, you knew nothing about FX. Where do you believe someone like that should start with us? At what plan level? Because we do have a good education section in there too, but that's free anyway, isn't it?
Yeah, that's free anyway. I mean, some basic educational stuff on all types of analysis, we have them for free. Although we are currently finishing up building the ForexAnalytix video store, and soon enough you will be able to find extremely detailed and elaborate videos on all types of analysis. And we're talking about hours and hours of videos. So, for example, I know as a fact because we had a meeting yesterday, Greg is preparing like multiple hours of videos on how to learn and trade with Elliott waves. And you know, Greg is one of the best in the industry trading Elliott waves, if not the best. Nick is also making videos on trading harmonics. I'm going to be making videos on basic technical analysis. Blake as well. Stelios is making videos on explaining how to use macroeconomic data, what is their significance, how they can affect the market, etc. So people will soon, within the first months of the new year, will have access to that material as well. Let me be clear, that material is not going to be free. but it's going to have major discounts, for example, for people that are already subscribed to ForexAnalytix. Stelio, did you say something?
Yeah. Hi, everybody. I just wanted to point something out regarding Dale's question. I think the thing to point out for people to know is that you can upgrade or downgrade your plan whenever you want. So if somebody is very new to trading or to FX or to all of that, you can start with something basic, because let's face it, Elliott waves, harmonics, they're complicated things. So, I mean, even I don't understand them very well. So you can start with something basic, you get your knowledge up, you get your experience up, and then when you're ready, you can say, yeah, I want to upgrade and I want to learn more about this. And every upgrade, it's the way it works, it's very fair. You get credited for whatever you've paid so far. So, it's all done very efficiently, and then you can move from one plan to another.
Draghi has started speaking, by the way. He said we stand ready to increase asset purchases, which is completely out of context of the recovery we're seeing in the EU. And as we see now, the euro is actually popping, so it doesn't really care of what Draghi is saying, because it's not buying into that. So Draghi is doing his best to be dovish so far, but so far the market just doesn't care about it.
Well, we're getting close to the 120 level in euro dollar, which is it seems to be a threshold where they get very uneasy at the ECB. So
yeah, because at the same time, Draghi is saying, the new forecasts actually are signaling strong pace of economic growth, and we have been seeing that. I mean, we've seen.
Poor Draghi, I feel sorry for him, because Christmas is going to leave him a lump of coal at the euro over 121.
Yeah,
so
Draghi
says
like
reinvestments
will help deliver appropriate stance, etc., etc. Strong momentum signals inflation will pick up. So at the same time, saying that inflation will pick up, but that we're ready to increase asset purchases makes no sense, because everybody knows that Germany is really hawkish, especially in stance on inflation. And when you're saying that
they remember the wheelbarrows full of cash.
Yes, that as well. That were, yeah, you remember, if you remember, I mean, from history, they ended up weighing cash, because counting them, would take forever. Because
cash and take the wheelbarrow.
Exactly. So at the same time, he says that strong momentum should lead to a pickup in inflation, and saying that we're ready to increase asset purchases makes absolutely no sense, because there is absolutely zero chance that with the current economic recovery that we're seeing in the Eurozone, Germany, for example, and the Bundesbank is going to allow an increase of asset purchases. We are probably rather closer to tightening, to some form of tightening than the exact opposite. So I think that the market completely disregards this kind of comments, because they don't bode well with reality. In a sense, I mean, Sven, that I'm following here on Twitter, and I like his commentary, is always very nice. He says, Draghi translated, everything is awesome, we're continuing crisis level policies, which makes no sense, because at the same time you're saying that things are doing a lot better, we're doing great, but we will continue to have in place monetary policy that we put there for times of crisis, and don't worry about it, we're not going to tighten.
Yeah, but the patient is doing great, but we're going to keep him on oxygen in the intensive care unit, even though he's doing great.
Yeah, something like that.
Yeah, exactly like that.
Stephen, the answer to your question is yes. You get that chatroom access in all tiers. Yes. Let's see. Ample degree, rising employment bolsters private consumption. Let's have a look at the euro pound, because it should be popping. And actually, we had a discussion.
It's going to 90.
We had a
thinker says 90.
Yeah, you know something though, Dale. We still haven't cleared this 88.70. Area. We might, but so far, something though. Let me have a fast look here, because I think I'm spotting something interesting in the euro pound.
About time. You bear.
There it is. 4-hour chart.
Yeah.
Do you see it?
Yeah. Head and shoulders.
Exactly.
Neckline at your moving average measures 90, doesn't it?
right?
I think Pinkert called the false breakdown there last Friday. If anyone was around, I know.
So be careful here because neckline is at around 88. Let's call it 88.40. You know, a pop above there. Let's see how it measures now that you mention it.
90.
Stelio, are you paying attention to the pressure as?
Yeah.
If we get anything, measures exactly 90 to the pip.
Oh, so you didn't believe me? You had to see it for yourself, you skeptical guy, you.
I didn't believe that you were so accurate. I mean, you were accurate to the pip.
Oh, I know. I'm just the host.
No, you're definitely not just the host.
I'm the host. And
everybody knows that you have decades and decades of experience.
Don't rub it in.
He's calling you old. He's calling you old now. That's what he's doing.
Okay, let's start having a look at a few more euro crosses because I know that now that's what's in focus. So we're getting a pop in the euro yen, obviously, but let's be honest. I think that everybody has been tired watching the euro yen. Euro yen has been trapped since the 15th of September in this range. So honestly, regardless of what kind of pop we get, unless I see a daily close above the 134.50 area, you know, 3 months, plenty of people have been chopped up trying to predict that, you know, the next move is going to be the one that's actually going to break out of the range. But, you know, it hasn't happened for 3 months exactly to the day. So I think that this is not an instrument somebody should be trying to trade at the moment. Let's have a look at the euros in the euro kiwi though. Euros broke below triangle yesterday, so be a little bit careful because that might extend the move lower towards this zone again, the 152.30, call it roughly. And the euro kiwi made it all the way to the 78.6. Keep in mind, I've said it many times, if you were looking for a move lower, because of the multiple rejections from the channel, that was a great counter trend trade, but so far this is a confirmed uptrend, series of higher lows and higher highs. So keep your expectations to the minimum, right? And that's a general rule when you're trading against the trend. Keep your expectations to the minimum. So we're seeing a pop from the 78.6. We've already been trading above yesterday's open. So, you know, let's see. Regardless, the 171.30 area might act temporarily as a resistance from this point on. So, you know, that doesn't mean that the move lower is over. If we get a retest of 171.30, I'm going to be very interested to see what's going to happen, because if we get rejected, perhaps then it means that we have one more leg to the downside, perhaps towards this support area, which is like a little bit below the 167 handle. Okay, let's have a look at the EuroCAD as well. Stelio, anything interesting from Draghi? Anything else interesting from Draghi?
No, I said the risk for economic growth is our balance, maybe a slightly larger chance for a positive surprise. They revised 2018 inflation 0.2 higher to
0.2 higher. That's not little, actually.
Yeah,
that's not little at all.
To 1.4 from 1.2, and the rest is the same. So, you know, overall, let's say it is on the bullish side. So, yeah.
Yes, Zach, we did cover the Kiwi breakout, mate. We did. Just seeing your question.
Hey, Steve.
Hey, Blake. Welcome.
Thanks.
Hey, Blake.
The 618 retracement in the euro dollar is containing prices right now, which comes in around 118.70, and so the high thus far has been like 63 or so. So the euro's kind of stalling as we're getting up there, and then precious metals have come down a little bit. You can see silver's still a lot of the you know, the bullishness from yesterday is starting to subside a bit here. Gold is coming off a little bit. I don't think they're necessarily reversing. I do think there's a little bit of profit taking from yesterday, but the euro is you know, it's going to have a tough time as we get towards 19. I think that the ECB is going to have a very you know, going to try to contain the euro dollar rally as much as possible, or the dollar sell off as much as possible. I think you know, if we start getting towards 119, 120, it's not a welcome event for the ECB. So.
Yes, absolutely, Blake. And this area, the 118.50, 118.60, 70, you know, since the summertime, it has acted multiple times. Resistance here, support, resistance, support. So I think it's not only the 61.8 of the previous move lower, it's also a general horizontal area of support resistance that has proven its importance to the market. So I do think that yesterday's move out of this descending wedge was obviously, you know, a bullish development, but I do want to see, as you mentioned, a daily close above this area to confirm that the euro's appreciation is ongoing. That's what I think as well.
Yeah, and you know, I sit here and you know, I'm looking at the euro dollar and just trying to you know, just trying to you know, imagine it going much higher today. You know, I don't know. We've had a really good move since yesterday, you know, rallying from the 117, you know, about 100 pips from where we're currently at. And, you know, being able to see it go even further, I'm a little skeptical that it will. But then again, you know, the ECB, as you pointed out aptly, is trying to talk down the euro, and instead it's going higher. You know, when the ECB, you know, is sitting there trying to actively talk down the euro dollar and it's not going down, and the ECB is trying to talk it down, that's a scary thing. And if you look at the longer term developments of the dollar index has had a very nascent bounce in the last, you know, whatever it's been, you know, was it, you know, several months, I guess. No, I wouldn't even say, well, yeah, I guess several months. Hold on. I would say, you know, since September.
Yeah, we bottomed the very first few days of September, yes. Yeah,
I mean, the bounce has been very, very minor in the dollar index, and that's got to be worrisome for dollar bulls, and it's got to be worrisome if you're the ECB and you're thinking, oh my God, you know what happens if we have to wrangle a euro dollar at 125 or 130 in 2018? You know, how are we going to deal with that economically? So I think those are some risks associated with what's, you know, kind of the longer term developments in the dollar right now. Did you see, like, you know, Norway overnight, the Norges central bank was really hawkish and really moving the goalposts, if you will, for a potential rate hike, and that is you know, showing you the disparity that we see between, you know, the Fed, who is they're nearing the end of their cycle. In 2018 we might have, well, they say 3 rate hikes, but, you know, can the overall economy take 3 rate hikes? I think there's a lot of skepticism out there. Regardless, the pace of rate hikes in 2018 are going to come to a screeching halt as we come towards the end of 2018, and as we go into 2018, you're going to see an acceleration of other central banks playing catch up or tightening policy. And so that's where the dollar is going to have, in my opinion,
and let's be honest, Blake, Norway anyhow has some of the best set of fundamentals out there. I mean, Norway is really one of the central banks that should, theoretically speaking now, if they were actually following policy decisions completely detached from what the other central banks are doing, Norway should have been one of the first ones to start.
They also have stronger oil prices working for their economy.
Oh yeah, that as well, actually.
So I'm sure Stelios has a lot to say about Norway and their path of rate hikes, or what they're looking at.
Yeah, I mean, the main problem, you know, I've been saying about Norway for months now, the main problem we've seen there is inflation is dropping. Now with oil rising slowly, and commodities also seeing an upward trend and all that, I think, I personally think, I thought that this drop in inflation would have stopped. It hasn't yet, so that's the main thorn in their side. Apart from that, everything in the country is very strong. So I've been bullish the kroner for some time now. It's been weakening a little bit. It's been very frustrating to trade, but I still believe in the fundamentals of this country, and I still think the kroner is one of the currencies to be in for the next year. So today, the central bank, they said effectively that from the fall they plan to start hiking rates, which the market did not expect at all. And that shows that they are taking into account everything that involves the Norwegian economy. And okay, granted, inflation is still low, but that's going to pick up. It has to pick up at some point. So, and they're trying to be a bit proactive. I still stand by that view. It's been frustrating, like I said, but I still think they're gonna start hiking in 2018.
Still, personally, I doubt very, very much that inflation is going to start picking up anywhere necessarily, because first of all, we know very well that the nature of demographics of Western societies has completely changed the inflation game. Second of all, the way we measure inflation is not so objective if you think about it. I mean, just think of how many important elements of everyday life are actually increasing in prices a lot, but they're not measured by inflation accurately. And we measure things that play a lot less of a role. Yeah. For example, renting costs, healthcare costs, etc., etc. Education costs, and exactly, food costs. I mean, those are soaring, and we are balancing in with items like how much electronic devices cost. It's like we're not buying like 2 computers per year and 3 TVs per year, etc. So I think the way they measure inflation, really seeing inflation like reach levels that it was at the some decades ago, that's not going to happen again. End of story.
No, I never said that it's going to go to.
I know. I'm just saying that. Yeah, but as it seems, many of the central banks have kept their standards of what inflation is, and thank God, recently we've finally seen some debate starting in this area as well. Like, should we actually be targeting inflation the same way we did several decades ago? Is it productive? And I think these questions should have been asked, a lot sooner.
Yeah, right. 10, 15 years ago versus
exactly.
Today. And even though there's still discussion, it's nothing. The way what the Fed still looks at as far as inflation gauge is still fundamentally flawed. So that's what may cause so many economists and central banks here in the next 2 years to really miss the mark on feeling these deflationary pressures. They may not see it coming if it hits us, and we'll look back and go, well, of course we didn't see it because we flawed the way that we looked at inflation, or the way that we look at it is
first of all, yeah, and second of all, Blake, we've already provenly built 2 huge bubbles in the past, perhaps partly due to the fact that we had very loose monetary policy based on the fact that, inflation should be higher. There are good chances that we're doing that for the 3rd consecutive business cycle, right?
Right.
How many times can you repeat the same experiment and expect different results? That's the definition of insanity, right?
It sure is. It sure is. Hey, just a couple of things that I wanted to share with you guys before Lydia comes in, and I know she's going to talk the cable, so I'm not going to talk about the cable really quick, but I wanted to take just a few moments just to point out. So we broke above this 50% retracement in the euro dollar here. I have to delete it. It's from earlier. But as you can see, this is the 618 retracement that I was talking about, and that's thus far thwarted prices. So, you know, the euro, I still think that you want to be a buyer of the euro on dips, or, you know, a seller of the dollar on rallies, but you might be able to get a little bit better price, maybe below 118 today, you know, 117.75 or something. That might be a better place to get it. The pound, like I said, I'm not going to discuss it too much, but the pound has come under a little bit of pressure. The Aussie dollar has been, and by the way, I got shook out of the pound yesterday. There was a headline regarding and Stelios, are you still here?
Yes, I am.
Oh,
yes.
Okay. Did you see the headline about the UK lawmakers will have been
Yes.
awarded decisions on Brexit? That I thought was a negative headline.
Yeah.
And I thought it was going to have a much deeper impact, downside impact on the pound, but the pound was swept up by dollar weakness, so it, you know, the pound ended up turning higher.
You know what, when I read that headline, my first thought was, yeah, this is negative for the pound. But, you know, and some people in the chat room have said that quite rightly, I think. You know, when you need a bigger majority to push something through, that means that, okay, you are faced with the potential problem of not getting that majority and, you know, all the uncertainty and all that. But in the end, the result you will get is something that's probably better as a solution, as a compromise, as a whatever you want to call it, for the country. So you know, the argument is, yes, if you need more people to agree, then maybe it's going to be something better. So that, you know, and the pound saw strength against pretty much all the currencies after that headline, which I was scratching my head initially about that.
Yeah, and I was too. I had to take my longer term pound off the table, even though I knew technically if we stayed above 133, I should have stayed in it. But, you know, even myself, I get caught in the knee jerk reaction on a headline like that, and so I ended up exiting right around the 133 like 60 level. But anyway, I'll let Lydia talk about the pound when she gets here. The Aussie's been really strong. You know, the Aussie, and this is one thing that, you know, we've been talking about the last few days, and I've been trading this to the long side since the end of last week, is we paused on a multi-year trend line, and to be short the Aussie dollar while it was above 75 cents, it didn't make any sense to me. And we've strengthened a lot on these. We've had a lot of good headlines. You know, the Australian employment print came in extremely strong, so the Aussie looks good, and I think you have to be a buyer on dips. If you can get, you know, a dip, and we're not even seeing the Aussie dip, we're seeing the euro dip, but we're not seeing the Aussie dip. And I'm sitting here hoping for a move down to 76 cents, and I've been hoping for it. I just don't know if we're going to get it. I think it's you know, I'm being a little too optimistic in how far I think the Aussie is going to be able to pull back. But, you know, if we get any substantial pullback in the Aussie today, I'm going to be using that as an opportunity to get long. The Kiwi also, now the Kiwi is really interesting here, and I got to show you guys this. We hit if you look at the last consolidation, we hit 161% extension of the last consolidation here. And then also the underside of the major broken trend line. So if you go back to, you know, the daily chart, I gotta show you guys this. This is that trend line, multi-year trend line, where we broke it. It was just extremely bearish following that. We came back and retested that overnight. And so I'm not going to get short the Kiwi. That's not what my plans are, because I'm actually bearish the dollar. But I think if you can buy the Kiwi on some sort of dip, if you can get it at, you know, 69.50 would be optimal. You know, that's another 35, 40 pips away or so. But if you can get a, you know, dip down there, I think that's going to be the place to buy it. And for those of you guys that are playing the, you know, pound New Zealand, euro New Zealand, those types of New Zealand yen, those are the things that you need to pay attention to, the New Zealand dollar, and understand why the Kiwi itself has come under a little bit of pressure here after having such a significant rally the last few days. Like I said, I think it's a buy on dip type of situation, but you got to wait for an appropriate dip. Also, like you look at the US dollar Mexican peso, the peso has had a nice rally overnight. from the lows. This is very significant, in my opinion, for those of you guys that are trading the peso, or we like to call her Salma in our chat room, as in Hayek. If the peso drops below this 1898, 1899 level, I think that's what opens up the rejection, if you will, from the daily charts. And we do have a big cup and handle pattern here, but it's just set up. It doesn't mean it's going to break out. You just, if we end up coming back below 19, I think that's kind of a bearish event for the peso. So with that being said, I want to pass it over to Dale. I don't want to take any of Lydia's time. I have a lot of respect for her and what she has to, and I want to hear what she has to say about the cable. So Dale, I'm going to pass it over to you.
Okay, man. Thank you very much.
Thank you. Thanks, Steve. Thanks, Stelios, and thanks for having me here.
Thank you, team. Hello, Lydia. I'm making you the presenter now. Looking forward to talking to you for, I don't know, maybe the 15th time. I haven't kept count. Hi, Lydia.
Hey, Dale.
How are you today? Happy holidays. I heard you. I heard you say hello, Dale.
Good morning, everyone.
Hello, Lydia. Happy holidays. Can you hear me?
Hey, Dale, you might want to just tell her or type to her that you can hear her speaking and everybody can hear her speaking. She just might not be able to hear us.
Yeah.
Okay?
Okay.
You might want to type her and just let her know that everybody can hear her voice.
Hear us. Lydia, can you hear me now? Right,
Dale, if she can, Dale,
yes.
if she can't hear you, mate, perhaps she hasn't.
Looks like she went offline. She's probably going to come back in.
Okay, okay. Or perhaps she hadn't chosen the right output. From the audio tab of GoToWebinar, you can select both the microphone and the output source if you want to be like the speakers.
I see presenter offline up there right now.
Okay, okay. So she's probably reconnecting then. Okay.
Hi,
Okay.
Lydia.
Hello?
Oh, here
Can
she
you
is.
hear us
Yes.
now, Lydia?
I'm here. I had some technical difficulties with my connection. I'm here now.
How about now? Can you hear me?
Yes.
Happy holidays for the third time.
Thank you. Happy holidays to you too.
So great to have you back,
Let me
Lydia. I don't
see.
know how many
Let me
times
just
we've
try
had
to
a
pull up,
conversation.
log in here.
Okay.
Sorry about that. My connection just went out on me.
You're being hacked by the NSA because they want to know what you think. In cable, they don't want to pay for a subscription, so they're just hacking you. Or it might be the Chinese banks. They want to front run your ideas. But I'm real interested with what's going on here since it's been so lackluster, Lydia. My bias is that the pound has more upside, and I was kind of thinking that it might rally into the Brexit. So be interested in seeing what your views are on cable, U.S. dollar.
Now, I have to say that I completely expected the weakness that we got going into the Bank of England announcement. If you've been trading, and you guys probably know this too, if you've been trading the pound for any amount of time, we typically get this weakness, even to the point where it would shake you out of your long setup. So here's my cable.
Right.
We took a look at this at the top of the week, and we started off the week, here, trying to stay above $1.35, which is really the big level that we're all looking at, especially as swing bulls, looking for this thing to get above $1.35, to stay above $1.35. So we've had these multiple jabs above, and we can't seem to get a footing above this level. But if we move us out to a weekly, so you see this orange line that I have here, and I can even delete this extension here. But if we look at this orange line, I'll try to zoom in a bit. Why have this line? So $1.35 is our multi-year low from 2009.
Yeah, I'm interested in what those fib extensions were, because I'm thinking one more high is a possibility. Where did you just erase those fib extensions?
Oh, I can put it back. So I just took it off to just be, well, I've expected a breakout. I actually expected a breakout above $1.35 and above these 136, about 136.50 level too, that former high that we got back in the summertime. And the line that I started to notice are these highs back here. So after we got this Brexit break last year, right, we finally got below 135 on pound weakness, and all these this subsequent consolidation really found highs at that orange line. I marked it off is about 134.50. And coming into this week, I've been thinking, okay, if we can get this, if we can get and stay above those former highs, we probably have a chance to stay above 135. Because if we saw on the weekly chart, we couldn't get above that level. We've remained below it ever since. And I have it orange because it's like my blue lines are like more significant areas. I have this orange just so I can see on these smaller time frames. Not that I think it's a significant high, but I do think that it is an area that we need to keep pay attention to. So we got this weakness. It's a great setup right into the 50%.
Kind of use that 3450. Kind of use that 3450 as a precursor to let you know that 35 is going to be challenged once we get over 4.5.
I'm sorry, Dale. Repeat it because you're breaking up for me.
Okay, that you're using 3450 as a precursor for a market tell that 35 is on the agenda if we close over 4.5 or stay over 4.5. Correct?
Gosh, why is my connection acting so funny?
Can everyone else hear me?
Yeah, I
can
can
hear you guys. Could hear
I can hear you fine.
Okay, so I think it's Lydia. Can you hear me, Lydia? Okay, Amanda can hear me. So I think it's Lydia's connection today. Anyway, we'll see if she's going to log back. I see her moving things around. I think she's going to log back in.
Okay, I'm back.
Okay, Lydia. All right, so I'm going to do less talking. Maybe that I interrupt you and that interrupts your internet connection. So I was just saying that your
That's never been a problem before.
Yeah, your 134.50 is a precursor move for it attacking 35. So it kind of gives you an early indication that 35 is going to be threatened.
Yes, yes, and we got a bit of that, but again, this is why it's orange, is that 135 is the ultimate level. So even if we saw this last week, even if we looked back here last week where we were above this level, and I wasn't even paying attention to 134.50. My eyes have been on 135 and 133.50. Like, to me, those are the bigger levels. These are just these former highs that were unable to overtake 135 when we got that first break below. So, ultimately it's still 135. So I don't want folks to get caught up on it, but we're looking as we got this, great setup into the 150 right there at 133, not the 150, the 50% level. Perfect setup, and this thing moved higher. We moved higher. We got the Bank of England just an hour ago, and boom, we're coming into these former highs, and we've signing some weakness. So again, I'm not saying that 134.50 is the level. I'm saying that it would be helpful. It is a nice signal. and that we have seen resistance at this level before, which has led us to drop to $1.19 or $1.20. So I'm of the mind that this is now setting up that we're actually going to see some, if we don't get above these highs just yesterday, if we don't get above these highs, then we're going to see more weakness. And I think we're going to fall back into this channel. And I think we're all familiar with this crazy channel that we got, over the last several months since October. And if I can just, let me see if I can clean this up and get a better look on the daily chart.
You know what gives me the belief and some confidence that a new high is coming in pound? Look at your RSI reading on your last chart at the high. Markets rarely peak when price is confirmed by momentum. So that's what I'm seeing there. On that time frame too, what's it, your daily? Yeah. Okay.
Oh, well, I'm sorry, that's confirmed price action. So let's see, you get back on the.
No, it's all right. So, I've just, sometimes nothing works all the time, but rarely do you get a significant market peak when momentum is confirmed in price. That's all. But this is your interview, not mine. So I'd be interested if you've wrapped up the pound. I teach that Euro Pound's a very important pair, even if you don't trade it. They have a handle on direction because it helps you with your trade selection between Euro and cable on your preferred longs and shorts. So if you can move on to Euro Pound, I'd be interested in what your views are here. Last Friday was kind of a significant day to me where they cleaned out all the longs and the shorts thought we had a breakdown. Wondering what you're thinking in EG.
Okay, I'm happy to move to that. The Euro Pound is one of my faves.
I think Blake said it's the most liquid pair out there.
Is it?
Yeah.
I would have guessed that was the Euro dollar.
Dollar ball.
Like it has. It doesn't move like it's very liquid. I mean, it's always, well, I think 10 years ago, it was one of the slower moves if you compared it to like a pound yen or even a pound kiwi. The Euro Pound to me is like, one of the ones that moved a little bit slower.
Yeah,
the heart race a little less.
Low beta. Maybe Brexit changed that.
Hey, that's quite possible.
Yeah.
Or even QE, just this extreme accommodation in the markets that had never been there before. So it could be that too. So pound yen, I'm sorry, Euro Pound. Euro Pound, I've been biased to the short side for a long time until last week's price action. And I'll tell you why. This price action looked like, so this is the zone 87, really around 87.50. I have a zone here, but it's really that 87.50 line where if we move out to a weekly chart, this is where we had been getting these lows back a couple months back, right? We kept coming into 87.50, boom, whether it was 87.60 or 87.30, but just that zone, we kept coming in and we were catching these highs, but being capped by 90.50. And that to me, being capped by 90.50 was a first indication of this would be a bearish, a move for more weakness, because what it is failed highs off this fib move on the weekly chart. And we finally broke below, and it's been a move I had been expecting, mostly because if we zoom in then now on the daily chart, we'll better see that we have been staying below 88.50. And 88.50 is a major line in the Euro Pound. It's been typically when we trade at these levels, it's been a level that we've been able to see, okay, if we stay below it, we get more weakness. And if we stay above it, we're able to get more, we're able to see more strength. And we can see it here back several months ago, if you can take a look at that. So the fact that we closed 2-3 weeks ago below 88.50, I was biased bearish. I felt like we were going to get a break of that 87.50 zone. And we finally got that last week. Right, in fact, to the, did I lose you guys?
No, we're here. We could still hear you.
I feel like my internet connection is not. Okay.
Can you hear us? We could hear you, Lydia. Hi, Lydia. Well, it's a shame, my friends, but we may have to try this again. Another time with Lydia. I think it was a great session. We had everyone bantering. I'd like to thank the viewers from investing.com that joined us today. And I still think that there's some excellent trading opportunities setting up. Although the dollar's recovering, I remain negative on the dollar here. I'd be looking to buy breaks in euro pound. Now I think Lydia's back. She's going to try and get back with us.
Okay, I'm back.
Okay, Lydia.
I'm so sorry.
That's
My
okay.
connection is just a mess today.
Well, you know, why don't you, because of that, we could always hear you. You seem to lose us. So
Okay.
why don't you just cover what you want to cover, like you're doing a webinar for the next several minutes or as long as your connection works. And we'll just handle it this way. So, you know, go towards what's really compelling to you and what you want to get across to people with cable and the crosses. Okay?
Okay.
All right.
Okay. Let's see.
And there'll be another time. There'll be another time too, Lydia, if it's, you know, just not going to work today. That's okay. But why don't you just, you know, carry on, and we can always hear you even though you lose us. So you could just talk till you're finished.
Okay.
All right.
Just seeing if my thoughts will even load here for me.
Yeah, that's what I see happen. We get like a gray look on the charts, and that shows that, you know, the connection's not that great. So right now we have euro pound up there. Okay, now you move to pound dollar again. Now you probably can't hear
Here we
me.
go.
Can you hear me?
Okay. I can hear you.
Okay.
All right. So, okay. So the euro pound, to me, this below 88.50 screams more weakness. However, this break last week, I mean, which was a great break, it was what I had been expecting, and it broke that level and it came right back. I mean, it came back with a vengeance, and I had to wonder why. And if we look back out to the weekly chart, which is this bigger fib back here, it's right into the 61.8 level, like to the pip, where you have buyers set up. Clearly, buyers were set up. However, we're still below 88.50. So we have sellers still lurking here for this longer term break, and really a break that really takes us back to the 83.50 area. So that's really what I'm looking for. However, we do have Draghi. I know he's speaking now, is in the press conference right now, and we'll see how this resolves itself. Because if you look on the 4-hour chart, and I'm almost scared to change my view, but if you look on the 4-hour chart, this is starting to look at like and set up like an inverse head and shoulder. And I'm not, if you guys know that I'm not a chart patterns person, so I would want confirmation from those who actually trade chart patterns. But that is a concern, along with the fact that we did not stay below this break of support, that we immediately rammed higher, back right up above support, and we're finding support again at that previous support level.
Right.
So those are things to me.
We could have a short squeeze over 88.50.
Yes, we need to get above. Yeah, we need to get above 88.50 to confirm this. But I'm starting to get concerned for the downside. You know, if you're short, you need to try to cover. If it gets, if we get back below 88, I would be covering shorts. I have some concern that we're no longer getting the weakness and the strength in the weakness that I would like to see when we break support like that, like a major support level. When we get below, we should have stayed below these lows, is what would have been great for sellers. That would have confirmed selling momentum. It would have confirmed the downside, and the fact that we squeezed right back above it and haven't been able to get back below there all of this week. Even on the Bank of England, though they didn't move on interest rates today, they were more optimistic than they had ever sounded since Brexit had even become a referendum on the ballot, right? They had been Carney had been very, very dovish about the UK economy and Brexit. And I think this is the first time that we had heard some optimism around Brexit, and we're still not getting a push lower. So I have concern for the downside now. This is the first time I'm coming out saying, like, I think that we might squeeze higher. Clearly, we need to get above 88.50. So there's still a lot of sellers in this market, and I think rightfully so. We'll see how the euro resolves itself after the ECB today, but I think that shorts should be concerned about the lack of weakness that we're seeing. We've been range bound all week, between 87.80 and 85, really 88.40. I'm sorry, 88.50 and 88.40. We've been range bound all week, and it's a very tight range as well. So to me, I think that
markets too, yeah. Holiday
I'm sorry?
market. Holiday markets.
Oh, that's true. Yeah, you're right. Clearly, yep, that's true.
So why don't we move on to the guppy and maybe cover 1 pound cross with a commodity currency.
Okay. Oh, great. Here we go.
Come on, baby. Come on.
I know.
You can do it. Come on, circle. All right.
Come on. There we go. Yes. Okay. Pound yen has been frustrating for the last several months, but we finally got this break about 2 weeks ago, which for most of us, the pound yen has been bullish, and it's been biased bullish because we've been staying above a 148. And I'm not going to go to the weekly, but if we look at the weekly chart, and you all know this, that 148 had capped highs of for months, 3 different times we tried to get it, and we finally broke above, right? And now we have these attempts, trying to either rally or to break lower, and we always got capped, and you see it here, but we'll see it back here too at that 147 level. We're not going to see it back there. That's fine. So we had been capped at 147 to the downside, and we got this break that, again, another one of those breaks that immediately finds bids, and we shot higher. And not only did we get back above 148, but we moved to 153. To me, that is all very bullish. I like the fact that we had a nice correction after getting close to 153. We had a nice correction. This is a 50% retracement. We had another move higher. It saw us get above 153. Now we've moved lower. And this move lower actually almost reversed this latest wave. So we have this fib now that we're looking at. I think as long as the yen can stay above 150 and ultimately 149, that we can continue to see this thing grind higher. So it's a frustrating price action, but again, like Dale, like you pointed out, it is holiday action. And
Yeah.
so we're dealing with that. We're dealing with that as well. Okay.
Okay,
that
so
blitz.
to me it looks
So then-
incomplete, like there might be one more high above 53. How about
I think so.
You think, yeah, that's a possibility, huh? So, what about, okay, you're going to pound New Zealand, so had a nice bullish run. Are you in a buy? We're getting a little pullback here. Are you in a buy the break mode here on this pair, Lydia?
The lines are all disappearing. No, actually. So I know last time we spoke that we were looking for 98.50, and we got close. We got 98.38, and now it went away. You saw it on the weekly chart. That's 61.8% fib line there. And I think that if you look on the longer term charts, especially on all these commodity dollar pairs against the pound, where we've moved into these we've moved nicely into corrections on the weekly chart. And if we don't see the pound strengthen on this BOE optimism, I think we have a real threat for the pound to weaken to the downside. And it might be mostly forward looking to the fact that in 2018 the market doesn't expect an interest rate hike despite the optimism. Here it came back. Right. So I have that fib right now on that latest move, that little stab higher into 98.50, and then now we have this break higher. So really, 190 would really be what we're looking at right now. We're retesting these former highs, which is great. I mean, this is a great move for bulls, like to, for the break. And now this is basically the retest of the former high back in May. Right. If we stay above that former high, which is 89.62, I mean, if we can stay above there, then yes, I think that we can make another stab higher and possibly make a move towards the 2 level, which would be real, extremely bullish, because that would be a break of the retracement levels from the drop that we saw back in 2016, basically the Brexit move on the pound Kiwi. If we can retrace, if we can break the retracement there, that would signal a move back to 220. But obviously first we need to contend with 98.50, and then we would need to contend with 2. So I'm not saying we're going to 220, but I am saying that if we can stay above these, if we can stay above 90 and really stay above this former high, that this retest is simply a correction, and it's a great, great correction. So.
Okay. You still with us? Okay. Now you're fading in and out, Lydia. Why don't you wrap it with showing your website and how people could reach you and talk to you when your internet's working better?
Okay. You all can find me at on Twitter. That is my favorite spot to hang out. Twitter. My blog is Faith Might FX. I would show it, but I'm scared that it's not going to load. FaithMightFX.com is where I blog, but I mostly do a lot more of my analysis on Twitter than in the blog posts lately these days. And if you're interested in just in coaching or mentoring, I know I've had some students coming out of this webinar, which I'm so grateful for, but you can click on Learn with Lydia. I have some courses there. They're one-on-one where
I think we lost her. Okay, everyone, we'll see everyone for TGIF. And remember, don't just count your pips, count your blessings. I think Lydia's gone. And we'll see everyone to wrap the week tomorrow. Thank you, viewers from investing.com. And thank you, Faith. You're welcome. And Tom, yes, yeah, Euro Pound. I tweeted that. You should follow me at Forex Stop Hunter. That was a 3 drive to a bottom formation with a stop hunt. Add all the elements, false breakdown, everything. Okay, everyone. Good hunting. Enjoy the rest of your day. Great job by Steve today and Stelios. You're welcome, Tom. Great job by Blake. See everyone in the other chat room. Back at you, Kareem. Adios.